Elon wants the freedom to, speak freely about Twitter and how he thinks it should evolve. And as a director, he might actually be hamstrung. I think that's the primary reason. I am interested in seeing how they do evolve the platform. Should it be a subscription service as opposed to advertising, taking away, advertiser fears that they're going to be put next to some content they don't want to be associated with. Subscription, that would be a huge transition.
Elon Musk is an entrepreneur, business magnate, and investor with strong links to several billionaire dollar companies. He is the CEO, founder, and chief engineer of American aerospace manufacturer SpaceX and the CEO and product engineer of Tesla, which currently has a $1 trillion plus market valuation. Last week, the billionaire offered to buy microblogging platform Twitter and make it a private company. He offered to pay $43 billion at $54.20 per share. Though the board immediately rejected his offer, Musk has not given up on his ambition to make Twitter a platform for free speech. More details about the deal later on in the video. Cathie Wood, the CEO and founder of Ark Invest, has weighed in on Elon Musk's decision to acquire the platform. Wood, who is one of the investors in Tesla, believes that Musk's decision to buy the platform is to ensure free speech. She also explains that she is not currently invested in Twitter but could invest in the future if she sees significant changes in the platform. We will now take you to Cathie Wood's interview. But before we do, please take a little time to hit the like button and subscribe to the channel. Thanks, and enjoy the video. The former fund hedge manager begins her interview by talking about the reason why Ark Invest is not interested in social media platforms. She also talks about the difference between Jack Dorsey and Parag Agrawal's leadership of the platform and why she thinks Elon Musk wants to buy it.
So our flagship fund, we don't own any Twitter. And we've started moving out of most of the social platforms because there's a lot of competition out there, number one. I think Meta platform, so Facebook, the sharp deceleration in its revenue growth to somewhere we think or their guidance was 3 to 11% for the first quarter. That was shocking and really brought to light TikTok is taking a lot of oxygen out of the room. And Twitter also, I would say the management change was another reason for us. Whenever we see big management changes, typically we're going to expect, this new executive, even though he was the CTO, kind of putting his own mark on the platform. And so that causes some uncertainty. And I feel like Jack's leadership was very important to evolving Twitter to where it was. And his idea of even opening up to sort of crowdsource the oversight of the behavior on the platform, we thought that was moving in the right direction. And Parag's first few things we saw after his arrival was more censorship. So, one thing after another. Well, it probably tells us more about the regulatory environment. It could be that Elon wants the freedom to, speak freely about Twitter and how he thinks it should evolve. And as a director, he might actually be hamstrung. I think that's the primary reason. We don't know the real reason, but I would imagine that's top of mind.
Is there anything that would get you back into that stock or into social media more broadly?
Well, one of the reasons we did hold Twitter is we thought because of its verification roots, that it would be a good platform for NFT verification. And they've talked about it to some extent. If we saw Twitter insinuating itself into that world aggressively, we might become more interested. But I am interested in seeing how they do evolve the platform. Should it be a subscription service as opposed to advertising, taking away, advertiser fears that they're going to be put next to some content they don't want to be associated with. Subscription, that would be a huge transition. Might be interesting, though. Might be interesting.
Still on Musk and his trillion-dollar company, Wood also talks about some of the reasons why Ark Invest is interested in the platform. She explains that her company focuses on certain attributes that Tesla has but is missing from its competitors. With these factors in consideration, Wood believes the automotive and clean energy company will continue to profit investors. Listen to her here.
We've thought carefully about this, and when it comes down to Tesla, the stock, the company and the stock, we pay a lot of attention to its barriers to entry. And as long as we see those moving up, and they are moving up, whether you're talking about battery technology, it's going to take a long time to catch Tesla. And what I mean by that is the traditional automakers. It's the only company with an AI that has designed its own AI chip for autonomous driving, taking a leaf from Apple's book. Apple was the only company to design a chip for a smartphone, a computer in our pockets or pocketbooks, and change the game. We think autonomous will change the game. And in terms of artificial intelligence, critical to success is high quality data. And it has more data, orders of magnitude more data than all of the auto and technology companies combined going after this space. Well, I do think from a cost point of view, its vertical integration has given it a tremendous advantage relative to other companies who are used to outsourcing everything. And so in terms of the winner take most, that's not as much about EVs, it's about autonomous, because that is a winner take most opportunity. And so the company with the best AI expertise and the largest bodies of high quality data and the domain expertise associated with battery technology, because autonomous will be electric, the electric transportation future, I think those companies are going to win, and there aren't going to be many of them. Our confidence is highest in Tesla.
A quick update on Elon Musk and Twitter before the video end. According to reports, the billionaire CEO has not given up on his suite to buy the platform. In fact, he has raised the money for the purchase. According to the Securities and Exchange Commission filing, Musk got $13 billion from Morgan Stanley, Bank of America, Barclays, and other financial institutions. Another $21 billion in committed equity would come directly or indirectly from Elon Musk himself. With a $279 billion fortune to his name, according to Forbes, it is clear that Musk could still very well make this deal happen. What are your thoughts and observations on Cathie Wood's video? Be sure to drop your comments below and hit the like button for the YouTube algorithm. Thanks for watching.